The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here 2 hours after Steve Rose does his show. Fabulous 2 hours. Thank you, Steve. We've got shows coming up today, Thursday, all the way through, right through until Tom O'Brien wraps it up. Don't forget those Tiger dollars. You get Tom O'Brien coming up next week. Every morning, he gives you the setups. He gives you everything. If you bought those Tiger dollars, you'll have an opportunity to be a participant, and I highly recommend that. It should be a great, great opportunity. So let's look at the markets right here. The Dow is trading. Let me just get this right here. The Dow is trading at 16,506. It's up a few points. And fascinating opening this morning, because after last night, where it looked very much like we were about to see a monster gap up in the morning, because Apple said it was going to split 7 for 1. Splitting means that you've got a pie and you split it into 7 sections. Not easy to do, but you split into 7 sections. They should be equal. That'll be quite a challenge. And then what happens is you've got what? You got one pie. That's all. So the hysteria with Apple up. Let's see what Apple's up right now. Apple is trading. Give me a second here. Let's see if I've got it. I got my data up about a minute before the show started today. So Apple's trading at 565, up 40, up 41. Gee, what a lot of movement in small increments. A lot of volume coming in. Most importantly, Apple needs to break to 575.15 to start leg D in the monthly. Will it do it? Well, with the pattern that we're looking at, that falling axe breakout pattern in the weekly chart, this is new leg A. This is new leg. Let me just double check, because I don't want to miss a peak. So that peak there was at 551.19. This is at wrong high. 551.19, that's correct, and 549. So this is leg B, gray B, in the weekly. But the moment it breaks above, so I'm going to put it in gray, because I'll explain also what that means. It means that the moment it breaks above the previous high in the weekly chart of the week of the 6th of December, the moment it breaks above 575.14, I have to put E/B. Why? Because the start of this uptrend was way above the peak, the trough that started leg A, down at 385.10 back in April, was it? April the 19th. So this, in fact, will be either a continuation pattern or a brand new buy signal that goes to a buy mode, and we won't know for a little while. Meantime, Apple's acting very well intraday. It hasn't given back much at all. Every little give back seems to meet with buying. We'll see what happens by the end of the day. Nice move up. And a couple of things I need to do right now. Let's just do this. I wonder if I'm going to get this information here. Weighting symbol attributes. All right, so the S&P at this particular point, that's the 2 pieces of information I haven't got. One of them is the S&P, and I'm not getting it, so I can't give you the S&P. I think it is up just a point. Give me 1 second here. Well, I'll get to it. Yeah, the S&P is up 4.70 at 1880, 1880 point something. So that's important, because if we go to the SPY, you'll see that the SPY is within just an eye blink away of the 188.40 high that was made on the 22nd of April. If it takes that out, especially if it takes it out today after that sudden decline, that'll be very important. Why? Because that will be leg B. I have really no other way to count it at this particular point but to call it a gray B. But it is still underneath the 189.70 area. So this is all retracement, because in this particular instance, it broke underneath. Oh, did it? No, it didn't. All right, so that means when it goes to a new, if it goes to a new recovery high, it'll be also an all-time high at 189.71. We'll deal with that in the meantime. Stochastics is 73, and the MACD is good. Let's just see what the day brings. By the end of the day, my bias is still not to be short, other than the core short that we have of the IBB right from the very top, but to rather be holding long positions. In fact, we added to our long position this morning. It's up kind of nicely after getting in almost at the low. So that's the SPY. Let's go to the Qs. 1, 2, 3. The QQQ Trust Series has, in fact, gone to leg B. And now it's going to be very important. Why? Because unlike the Qs, the NASDAQ futures, if you look at the NQ and QM14, this is still leg A. A very powerful leg A. I'm going with the cash, and the cash says that the QQQ series is in leg B, and it's really important that this leg B challenges the middle of the candle of the 4th of April. And that would say that the Qs need to get to 88.56. If they can trade at 88.56 for 3 to 4 120-minute bars, so that's 8 hours, almost a day's trading, that'll be really important, because it says, you know what? I now have the energy to try for the high of that bar, and that is 89.68. Doesn't sound like much, but in this particular market, it's still a mixed market. You've got certain stocks that have got clobbered yesterday, and others that spiked sharply. Look at Facebook. Facebook came out with earnings that seemed to blow away everything. And what happened was, whoa. Look at this. Facebook opened at 63.60 today. It went down to 59.77. Oh, that would have been a nice entry point. I didn't think it would gap down like that. And then it went to 63.65, which is the high, and now it's trading at 62.75. So nice going there, Facebook. So let's continue. We're going to look at, now that I've got all my charts up, I can look at the GCM 14, because gold suddenly had a spike because there was this Russian news. There's always Russian news. And what happened was it went all the way down to 12.17. I think that was close to where I was saying it better hold. Whoa, it better hold. I said this is the continuous contract, the 1277.40 low of the 1st of April. What happened is it went below that. It went down to 1268.40. I mean, that's a big hit. And now gold is up 640. And that is really quite impressive. In fact, it had a high of 1299. And looking at it, well, I have to wait for the day to play out. Was that an emotional? Was the decline the real trend of gold? Or is this the real trend of gold, that it was an aberration, it was pushed down, and now it's like a cork in water, it's popping up to its natural level at this particular point? We'll watch closely, because the GLD pulled back, went up, and now it's in the middle of the range at 124.15. The silver contract, let me just go to SLV, which I haven't looked at for a little while. SLV retested yesterday, 2 days ago. The low was 1871. It went to 1857 today, so it went, no. 1857 was the low on the 22nd. 1857 is the low today. Same kind of candle, huge move to the upside, and now it's right on the 9-period moving average, halfway in between at 18.87. Fascinating markets. What a beautiful challenge it's been, just to try to stay on the right side, and we've managed somehow or other to be able to stay on the right side. I have to tell you that it's taken a lot of work, a lot of extra evening hours and early morning hours, but I believe that the trend at this particular point remains biased towards the upside, and that's all I can say. Now let me do this. Day's young, of course. I wanted to look at bonds. Actually, I haven't looked at copper. So copper is, and I haven't heard a word from my engineer. I think we've got a little IM problem here. I'm going to close this out. I'm going to start. Al, I'm going to close all the tabs. I'm going to try to start again to get online with you. And I'm going to say, hi, Al. And let's see what happens there. So look at this. Copper. Oh, what a move. Copper is up 0.059, up 1.93%, broken out in leg D. Oh, my goodness. I think I heard Andy Heck talking about being positive copper a little while back. Congratulations, Andy. So this is a very nice move going into that Grand Canyon cliff slide to the downside from starting way back in mid-March, and it goes from the 3.22 area, plop, it goes down to a low of 289, was that? 2.879, and that was made on the, what was that date? On the 13th of March. Wow. And now it's springing back. It's looking very good. This is a positive. I have to tell you something. This is leg B up in the weekly after looking just horrible. Now, let me just grab the HG at. This is the continuous contract. I just want to see, oh, yes, A to B, right there. Peak A, leg B in the weekly chart. And what did I say for the, yep, that's a D. Oh, this is different. This is D and possibly a brand new E/B. Oh, copper's acting well. This is a very positive sign for the economy. It really is. Nice. Copper, you keep up the good work. The Tigers, Dan, we're all rooting for you. Okay, so that's that with copper. Let's look at EUR/USD. And that is it's just acting kind of in the middle of a range. Let's look at this. It's up a little bit. It really, just stuck in a range. That means the dollar might be stuck in a range as well. The dollar, also just in a range. Remember, if the dollar rallies, you don't always notice it because it's so modest, the rally. I just want to do bonds, and then we can go straight to other areas here. TLT. Now, the TLT in the weekly chart is a very positive chart. It looks to me like it will make leg D. If it doesn't extend leg C this week by tomorrow afternoon, tomorrow at 4 o'clock, doesn't go above 111.51, I'm suspecting that it does go to leg D in the weekly chart next week. And then if it starts to pull back, that'll actually become a market positive. Whew, isn't that interesting? And missing some nice trades over here. Well, that's the way it goes. Nice action in the E-minis. And I wanted to do a couple of things here. The IYT, remember the other day I was talking about, I said, oh my goodness, the IYT is just soaring. It's broken out. It's at all-time highs. Well, it's in leg C in the weekly. It is in leg, is that a brand new leg? Yeah, I'm going to have to call this a brand new leg. Well, yeah, brand new leg. No, don't tell me this is brand new leg.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I'm looking at this IYT. I've got a different count here. I've done something a little differently. I'm calling this, at least for now, a C in the daily. It's not a problem. It's the MACD's at 89, 90%. The MACD is strong. The stochastics at 90%. On balance, volume's good. I'm not going to do anything with it right now. We don't actually have any positions in any of the transportation area. But in fact, that's a great shame. Why? Because the American Airlines is doing very nicely. DAL Delta is right now also holding at 37.02 after a very big gap yesterday and holding the gap. Leg E in the weekly chart. There are things going on here that still tell me that there's a good chance that we're going to rally, and we can rally into next week. That's where you got to be a little careful. I think next week. I haven't got the closing prices for today, so I'm not going to take a guess on that. Or for the week on Friday at 4 o'clock. I'm just saying that's kind of what I'm anticipating. Now, there's something else that's going on here. I need just once again to quickly check on the gold price. Has it gone higher or lower? Oh, it's pulled back. Now it's only up 420. I'm going to be watching this because what this candle could be saying right here in the daily is that it's retested the left side low, and now it could make another arch formation within this rectangle. There are some stocks that have done very nicely, especially some low-price stocks. All I can say is, in looking at the chart itself, it is attempting to make a base. The technicals are at a higher level today than they were at the low that was made, and now where it's trading in gold itself, in the gold contract, than it did back on the March-April turnover of the month. And I'm just going to look at the 120-minute chart. Well, it's just one weird candle. A, B, C, D, and then it pulls back. Yeah, I need to wait the day. I need to see, is the market going to say, hey, that was an aberration, and the trend was in fact starting to pull back, or not? So I'm going to go to Mark in Denver. Hi, Mark. How are you doing?
Good. How are you?
I'm very well, thank you.
Good. We looked at Staples the other day.
Yes.
Having quite the morning. Wondering what your thoughts are on this now. I held on. Still got to stop right around 1180-ish. And,
all right.
Trying to
and now it's trading at 1216.
Yeah.
And made a high today already of, I think it was something like 1225, 27, 1227. You know, remember, as I was speaking to you the other day, we were looking at it, and I said, watch the lows. It's very important. But there were a couple of little signs that said that if there was going to be a movement and it got in, so I skipped yesterday, so it must have been the day before, but I think I said somewhere around 12:08 or 12:10, 11, somewhere there, if it could get back into that, especially if it could get back to the 1220s, that would be exactly the candle that we'd be looking for. So actually, I've got here for folks, if you're looking, I've got it long at 12.13. We actually took a small loss at 12.13. I haven't typed it in. I should have typed it in. I just didn't want to hold it in case it made that H pattern and started coming down, because they could have been quite quick. I like the action now. What I'm going to suggest to you, because you've had the patience to hold through a very important 2-3 days, I'm also going to suggest to you that some part of your position should have a stop just a little higher, and I'd probably make the stop now 11.91, raise it about 10 cents. And if, perchance, by the end of the day, it actually manages to try to reach back into the 1220s, one part of your position can have a stop that says, no matter what happens, I don't want to hold it if it's going to go below, and you can make a number, but my guess is if it goes to 1220 or 1221, I would raise the stop on some part of the position just for the day. That's going into Friday, if I don't speak to you, just for the days, because I want to see that this has had a history. If you look at it, every other day has been either up or down, or maybe 2 days down and 2 days up.
Yeah,
so I want you to stop the yo-yo. I want to see that it has followed through to the upside tomorrow. I want to see that by Tuesday of next week, maybe Wednesday, but I'd say I'd like Tuesday, if it's listening to me. I'd like it to get over 1249 to start leg B in the weekly. The moment it does that, it gives me at least comfort to say that in this particular environment, Staples is one of the stocks that's actually participating on the upside if the market continues to rally. But if the market doesn't rally, well, hold on, because I want to talk about this, because I like the action right now. So hold on. Can you hold on?
Yep.
We'll be right back. We'll be back with Mark and look at Staples in more detail.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. And this is a fascinating thing. Dow's up 29, S&P's up, and we've got about 7. This is a very interesting market because the market was up quite a bit, and then it went plunging down. Some news, European news, I think it was, or Russian news, I can't remember, just been flashing by on the screen. I didn't have the sound on. But now we're coming back a little bit, and what's really important about this is that in the retracement now that we're looking at, these are new emboldened buyers. They're trying to get into the stocks that earlier they missed. And I'm going to be watching this closely. We were on right now looking at, where are we? And looking at Staples. And looking at Staples with Mark in Denver, I'm saying that at 12.16 up 25 cents, that's really nice action. In the I'm pleased I went to the 120-minute chart because there's a lot of stuff going on here in the 120-minute chart. Basically, there's a rectangle pattern with tremendous resistance at this pinky line right here. If you're looking at Tiger TV, I've got the 120-minute chart up right here. Normally, you'd see on the left, you'd see my daily. In the middle, you see the weekly. On the right, you'd see the monthly. I love to look at 3 time frames at once. I actually like to look at 4 when I get a chance. And in this particular instance, you can see that it's stalled again at 12.21. That's the resistance. But the MACD is starting to improve. It's making this bowl formation, B-O-W-L, not a cup, but it's sort of an extended bowl formation. And the stochastic is doing its really best at 44%, but it actually should be, at this point, the stochastic should be at 68 to 75%. Actually, I would like it at 80%, but it's not. It's only at 44%. So that says to me you're on the right track. And the reason why I wanted from the daily chart was to say just some part of the position. You want to be a little careful because it keeps giving back. And actually, for a stock that trades in the 12s, jumping around from 1248 down to 1160 in just 3 days, and then coming right back again to 1238, and then pulling back to 1285, or 1281 actually, and now bouncing up to today's high of 12, what was that I say it was, 27. This is really very big percentage gyrations. But now what I'm looking at is it's not exact. I like to do things pretty exactly, but I'm going to say approximately right now there's a symmetric triangle that's forming. That's an equal degree to the upside and about an equal degree to the downside in this case. And it's saying that if Staples was able to climb into the 1221 area today, it'll really be great if it can do that today and get back there. That says for the first time, the weight of evidence above the 9-period exponential moving average has a couple of very strong green candles. And that says that there's then a chance that you can test the high of 1237 that was made on the 14th. So I like it. I'm still saying to you it's more a recovery type stock that you might expect. There's going to be a set of stair-step moves. It's going to jump, and then it could just hang around for quite a while. If you're in place for the jump, it's fantastic. If you get it at the high of the jump, you can sit there and say, oh, now I'm in a losing position as it consolidates. That's kind of been the modus operandi. I love what it's done so far today. I think you're on the right track. I think your patience is being rewarded. Only thing I can say is maybe for another day or two, I'd raise the base on half the position. What I would do, and this is a very interesting thing, I did that with one of our positions. Because it was acting so well and still acting well, I changed the half position that I was going to take off if it pulled back a little bit more than it did yesterday. Thank goodness it didn't. I've now taken that off. I want to try to keep the whole position as long as I can. I want the option later on of saying now we can take off half the position because this is where the best result is. So, Mark, if that fits into your scenario, I think you're in the right position. I think you're in the right position. If there is a big pop-up, then you just have to hang around as it consolidates. Hope that works for you.
It does. It's been really interesting in what I've noticed on it in the mornings. It seems to really pop. Like the last 3 days, it's popped up in the first kind of
and then giving it back.
30-minute bar and then giving it back. And today,
today it hasn't.
To do that. Not completely today. So
now here's another thing. I'm so pleased you brought that up because I always talk about characteristics. Stocks have particular characteristics. There are stocks that people trade. They just know that it gaps in the morning early on, and then it gives it up. And then there's another session completely different later on in the day. And in this particular instance, what I'm saying to you is, yeah, that's a characteristic that it's worth noting. And you want to note the aberration. So far today, this is an aberration because it's holding very well. And it looks to me from the 120-minute chart that it's trying to make that, it's trying to hug the 200-period moving average at 1221. If it can start to trade for 5 out of 8 of the 120-minute bars, nicely above 1221 in the next 3 to 5 sessions, that almost certainly should turn that into very good support. That old 1221 to 1205-ish area should then become very good support for just momentary pullbacks, and then it springs high. Hey, nice patience. Congratulations.
Thanks, Basil.
Good. Thank you for calling. So, folks, this is the other thing I want you to do. General Motors, trading at 34.44 right now, had a very strong spike to the upside. I'm impressed with the General Motors lineup. I don't want to talk about anything else at this point in terms of the fundamentals. No, I don't want to not talk about the fundamentals. I'll talk about the fundamentals. I want to talk about their product lineup. When you're driving on the road, you tell me, you send me an email, do something, let me know. Are you seeing more American cars than you've seen, I would even say forever, for at least 3 decades? Are you seeing more American cars on the roads since the Japanese, the Toyota started to take over the road from the 1980s into the 1990s, and then it just became the standard bearer for quality Honda, Toyota, Lexus, etc. Are you not seeing more American cars, especially the smaller Fords, the Ford Focus and the Ford, what is the other one, the one I like, with a little snout there, a little Ferrari snout, Ford Focus, and someone on Fusion, and Ford Fusion. And the back of the Fusion this year is actually starting to improve. I wasn't that happy with the back before. Now I think the back is almost as appropriate as the front. And I look in the rearview mirror and I say, hey, nice go. There goes a Ford Fusion. I'm beginning to say to myself, there's something that I spoke about if you go to the front page of TFNN, and you'll see education. The chapter I periodically talk about, it's from a book, The Psychology of Investing, published by Wiley. Lifson was one of the editors. And I have the last chapter, chapter 13. I talk about the mega stock market still to come. This is written in the 1986, 87, 88 period. And if you are looking at different socioeconomic trends, what I said then is going to take a while, but I suspect that Cadillac, the pink Cadillac, will become once again the premier car company and car. And not only that, this is when General Motors was building plastic parts in the engines. I mean, I couldn't believe how disgusting it was. But at the same time, that's what you're beginning to see. And young people, more and more young people I see driving Cadillacs instead of the BMWs that they would normally want to buy. And I'm impressed. I'm impressed with the quality improvement. I'm not yet impressed with, let's see, how can I put this, with the overall status of the Cadillac. It is nothing close in longevity, and the engine quality is not yet there. I'm talking about when I compare the longevity, when I look at consumer reports and I look at reliability, you're just not seeing that in the Cadillac yet. And I suspect it will be there, but it's not there yet. That's number one. Number two is when I'm looking at the Ford lineup, I'm saying to myself, hey, that's a big improvement. The Lincoln's still got a ways to go, but it is a big, big improvement. And certainly, if you're on the road and you just start counting the number of American cars as opposed to anything else, the difference is phenomenal. And I think that's going to be representative, it is representative this particular time of a mindset of Buy America. And that's what I spoke about in this particular chapter, that at some point, Buy America will become the thing to do. And I just, I think that's I think that's important. And I think that General Motors, as a longer term buy and hold, meaning this year, maybe into next year, I think there's going to be quite a bit to go. They've got to get rid of, they're thinking that, can you believe, I used to have an ignition, I used to have a key that got stuck, and I couldn't understand what was going on. And then I was told by the guy at the garage, he said, hey, yeah, you got so many keys, you don't do that. This is the worst thing you can do. And that's what all General Motors had to do was say, hey, just don't keep one key, keep your two keys there, nothing more. Oh, and then immediately send out. It's the most inexpensive thing to fix. And they never did it. So that was the old thinking. I think the new thinking has changed. And that's very important. Quick question here. Can I look at so General Motors given back almost all the gains from the gap up this morning. That's fine. I think that's okay. I'm watching the weekly charts start to improve. I think there could be a 1 point pullback here in General Motors. I think it's starting to form a base. Ford, same thing. Ford actually is a little bit better action. It's holding better. It's at up 11 cents at 16.34. The chart, though, of General Motors is actually a slightly better chart. So I like them both. I think that these stocks are doing well. Now, the other thing I had a question of, would I look at the VIX, and I'll go to the VIX right away. And then I got some email questions I want to go to. What is the effect of GE or SPX buying? And the other question was Goldman Sachs, what's the wave count? All right, I'll get there. So the VIX index spiked it went all the way up to 1408. 1408, where is it now? 1334. What does 1334 represent? It represents buying pressure. So be careful. I think this buying pressure is, it should hold into most of the day. I'm not sure about the close, but it should hold. And that should be at least helping the market stabilize. So that's the question that I was asked. And in the, it's only leg B, and then it's, no, I think it could be C. 1326, yep, it's leg C, and it's probably peak C in the 120-minute chart. Not a good pattern at all. We'll see what the day brings. If it has a bounce, the market will pull back. Keep it as simple as that. Now, the next thing I want you to do is, so Angie says in there, Expedition Ford, is in the shop. So we have a Toyota Sequoia. Everyone loves it. There's a lot more room, and the seats are very comfortable. I was shocked. I know, this is what I'm talking about. I don't understand why at this particular point, and I believe it's a union thing. I'm just going to make a big deal about it. Because if the unions turned around, like I said, 5 years ago, 6 years ago, 8 years ago, 10 years ago, 15 years ago, if the unions didn't turn, 20 years ago, if the unions didn't turn around and say, you build quality, American automobile companies, because we want to keep our jobs, and the better your quality, the better our jobs. Hey, keep it simple. That's all they had to say. The union bosses were totally as irresponsible as Smith and all those other guys at General Motors and Ford. All right, Julie. Julie wants to know, what is the effect of the M&A with GE? Okay, let me just tell you that I tend to treat these things as noise. It is the result. Oh, look at GE. Pulls back today. It was on my buy list, and I didn't have the courage to pull the trigger. 26.23 was the low today. It's trading right now at 26.60. That is the result. Julie, all you have to do is look at the price action. It isn't good. It isn't good enough to do the analysis and say, oh, that's good, that's bad, that's good, that's a bad M&A. Those takeovers and the sell-offs and the spin-offs and all that stuff. It is, how does the market treat it? That's all you need to worry about right now. The market's saying, hey, GE, we don't know exactly what you're doing right now, but you're doing something right because we're bouncing. That's all I'm looking at. And the weekly chart is improving. And if you get GE, IBM, which is stuck. IBM's just now stuck. It's had a bad news. It's tried to rally. It's kind of stuck. Triple M, gapped down, but it's closer to its highs than its lows. I'm going to be watching this real closely. And UTX, which is close to its all-time high right now, if these four of my Dow Quartet act quite well, I have to consider that that's very important. And what will happen is that they will be telling me that the internals of the market as it relates to the Dow, the cyclicals, are in majority doing well. There's another question I've got here about Goldman Sachs. I'll be right back to look at the financials. Basil Chapman back at the business hour. Be right back for this segment. We'll be doing Larry's show today. I'll be back for the next hour as well.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. I will be, as I say, I'll be doing a live show after this, and so stay tuned. What is that? I'm hearing music, but I shouldn't. Yeah, okay, good. I just want to show this chart here. This is the Chapman Wave methodology. You go to the lowest, most obvious low bar, and in this case, it's the E-mini 2-minute chart trading at the low was 1863.75 back at 10:10 this morning. Then it goes, and all you look for are 4 higher peaks. That's where you can expect that it could be the deepest pullback. Doesn't have to be, but that's where it's most likely going to occur. And it goes peak A, peak B, and that was peak A at 10:32 this morning Eastern Time. 10:40 comes peak B. It takes a bit of a sell-off, but it holds very nicely, goes back above the 9 EMA, goes to peak C above the 200-period moving average, just slightly above. Am I going to get used to this ever? They've changed the colors. 18 something or other. Oh, boy, am I going to have trouble with that. 1876, I think it is. And then it pulls back, and then it goes to a doji candle. Always look for those doji candles. And then at 1877.50, it makes a peak D, and now it's pulling back. And this only a 2-minute chart, remember. This should take a little while for a breather, and then we'll see whether it's able to make a new recovery high or not. Just wanted to show the simplicity of the technique. Well, in this particular technique, what I was saying is that if those at least 3 out of the 4 Dow horsemen that I have are acting well, that's very important. Now, the other thing is this. Goldman Sachs, when you're looking at Goldman right now is trading at 161.84. This is the first time in quite a few weeks, since back around the 7th of March, that Goldman has had 2 consecutive weeks of up move. The week isn't finished, but so far it's looking very good. Most importantly, I'd drawn in this down channel when someone had called the other day, and what I'd said is, well, two things I'm noticing now. It's gone from a peak F top at 173.59 to trough A, B, C. Now we go to D on the downside. As the stochastic MACD and on balance volume turned around on the 13th, 14th, it was the actual date is the 11th, and then you get a silent doji after that, confirming that there's a trough made. Another long-legged doji. No, it's not really long-legged. There's another doji on the 15th, and then a spike up, a give back, and now it's testing the 9 EMA, and pop, it goes up after a doji yesterday. This is the key moment for Goldman Sachs, trading at 161.87 up $1.42. Why? Because it needs to break this down channel. It's not a down channel, it's an expanding axis, that expanding wedge formation. It needs to decisively take that out and get into the 163.30 to 163.30 to 163.75 area, and then all of a sudden turn the 161s into support. That'll be really important. So the question was, Goldman, what wave count? In the daily chart, this is now, it just started today, leg B. That's the daily count. And it's a gray B because it's way underneath the previous high. That's not to say it couldn't get a full count. I'm just saying that's the way I call it, because until the stochastic and the MACD really confirm the buy mode, and in fact, with the price, and that'll only be confirmed as I'll only confirm a buy mode if Goldman Sachs closes in the 162.30 or higher area. I think if it does that, there's a good chance it's going to go to a C and a D. But it's that weekly chart that is really important to me, because the MACD's got a huge differential between the green line and the red line, the fast-moving average and the slow. And the stochastic is only now crossing positive and still at 14%. So this is early on in Goldman Sachs' retracement until it gets into the candle of the 4th of April. I can't tell you anything other than, yes, acting very well right now. It needs to continue acting like this, and so far it's acting in a way that says it should go higher. Folks, we're going to wrap up now. My service is the opening call. Use your Tiger Dollars if you want to try out my service. I'll be back for Larry's show straight after this. Stay tuned. I'll be right back.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.